Looking for your next winning Airbnb market of 2025? Some cities and countries are exploding with new demand, while others might surprise you with hidden risks. If you're a short-term rental investor, these trends could mean the difference between record profits and falling behind. Hey everyone, welcome back to this channel where we decode short-term rental trends with AirDNA data. Today we're revealing exactly where short-term rental demand is skyrocketing, both globally and across the US. We'll break down which markets have the sweet spot of rising demand outpacing supply, so you know where to look next. Stay tuned to the end for how we pinpoint these hotspots so you can trust the numbers behind your next investment. First things first, not all growth is created equal. In short-term rentals, two metrics matter most: supply and demand. Supply means the total active listings in the market. Demand means the total nights actually booked. Investors care about demand because real guest bookings means real money. But here's the catch. Too much supply without enough demand means lower prices and more competition. That's why AirDNA focuses on where demand growth outpaces supply growth, giving you pricing power and healthier returns. Globally, a few countries stand out in 2025 with eye-popping growth. Saudi Arabia tops the charts with supply up 104% year over year and demand even higher at 110%. That's thanks to massive investments in tourism through its Vision 2030 initiative. Other standouts? Venezuela rebounding with 73% demand growth and 57% supply growth, and countries like Kazakhstan and Albania with 70% and 68% growth in demand respectively. But here's where smart investors pay attention. Countries where demand growth beats supply growth are real gems. Think of Saudi Arabia, Venezuela, Albania, Morocco, Chile, Japan. Be cautious though, because some places look strong in supply but are weaker in demand, like Pakistan or Argentina. If supply races ahead too far, pricing power slips fast. In the US, the real story this year is the boom outside big cities. Downtown condos, they're taking a backseat to small towns and rural escapes. Why? There's three reasons. First, entry costs are lower. You don't need a mega mortgage to grab a property with strong returns. Second, fewer regulations. While big cities tighten short-term rental rules, small towns are rolling out the welcome mat. And third, more spaces. Guests want extra bedrooms, yards, and privacy. Numbers back this up. Small cities and rural areas have 14% demand growth with 17% supply growth year over year, while urban demand is shrinking. That's a total flip from just a few years ago. So where exactly should you be looking in the States? Let's break it down. On the supply side, Indianapolis, Indiana leads at 33% supply growth, followed by Bloomington, Indiana, Tuscaloosa, Alabama, and Killeen, Texas. But demand is the real gold mine. Jersey City and Newark top the list with 38% demand growth. No supply, since New York City's strict new rules are pushing bookings across the river. Other US winners include River Gorge in Kentucky, Ocala, Florida, College Station in Texas, and Cleveland, Ohio. Markets where guest demand is growing faster than the new listings, keeping pricing strong. A quick heads up, markets like Tuscaloosa, where supply and demand are neck and neck, need a closer look at local ADRs and occupancy to see if pricing power is holding up. Always double check the fundamentals before you buy. Wondering how AirDNA identifies these booming short-term rental markets? Well, it's all about data. Our team analyzes over 10 million listings worldwide, using 12-month trailing data to cancel out seasonal spikes. We only look at the top 100 markets by real supply and demand volume, no tiny outliers or broad regional guesses. Growth rates are calculated year over year, but remember, percentages don't tell the whole story. A small town doubling bookings might sound to be tiny compared to a mid-sized market growing slower, but adding thousands of booked nights. Use this report as a starting point. Always pair it with deep dives on local regulations, acquisition costs, seasonality, and competition to make the smartest investment. 2025 is already shaping up to be a pivotal year for short-term rental investors. Whether you're ready to expand globally or stay local, knowing where real demand is growing faster than supply will help you stay ahead of the curve. Now, if this video helped you out, hit that like button and subscribe for more Airbnb and short-term rental market insights. And if you're serious about your next investment, check out AirDNA's for real-time data on any area in the world you're considering. Thanks for watching.